Hello viewers, so welcome to my channel. I'm Hasham Ali Khan. This is the last video on problems of inventory management. So far I have completed the problems on working capital management, receivables management, cash management and inventory management. So if you want the perfect knowledge, watch all the videos from beginning. Then only you can be able to face the examination confidently. And without understanding the theory, we should never go to problems. So I suggest you to go to the playlist of my channel, select the subject financial decision making. Select the videos of working capital management. Be acquainted about the meaning of working capital, meaning of cash management, receivables management, particularly inventory management. Then you come to these problems. Now this is the last and final video in which 3 more problems on inventory management I am going to explain you. So before starting the 28th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep it ready. Take the screenshot of the solutions of 28, 29 and 30. Then I'll explain all the points in detail. Come on, see the 28th problem. The finance department of a company provided the following information. The carrying cost per unit of inventory are 10 rupees. The carrying cost per unit per annum is 10 rupees. The fixed cost per order 20 rupees. The number of units required is 30,000 per year. Determine the EOQ, economic ordering quantity, total number of orders in a year and the time gap between 2 orders. So 3 questions are asked. The first question is asking you to calculate the EOQ. Already in the last video, so many problems we have done. Now, EOQ, the formula is 2CO by I. C stands for annual usage or annual requirement, that is given 30,000 units. And O stands for ordering cost per order, that is given 20 rupees. And the case I stands for carrying cost per unit per annum, that is directly given in the problem 10 rupees. Now substitute all these values in the formula of EOQ. 2 into 30,000 into 20 divided by 10 under root. 1,20,000 under root. So after root you are getting 346.41. Now we rounded off to 347 units. This is the EOQ. Now number of orders in a year. The formula to calculate number of orders in a year, annual requirement divided by ordering quantity. So annual requirement is 30,000 and the ordering quantity is 347 units. So 30,000 divided by 347, you will get number of orders. Here you can see 30,000 divided by 347, 86.45 or equivalent to 87 orders. In 1 year, 87 orders should be placed. Lastly, it is asking you to find out the time gap between one order and the next order. To find out the time gap, we apply the formula number of days in a year divided by number of orders in a year. So year consists of 365 days and number of orders we are placing in a year is 87 orders. So 365 divided by 87, 4.195 days, or we can say 4.2 days. So time gap between one order and the next order is 4.2 days. That's all. This is the end of problem number 28. Now 29th problem. A material manager has the following data for procuring a particular item. Annual demand 1000 units. Ordering cost 800 rupees per order. Carrying inventory 40%. Cost per item is 60 rupees. So carrying cost is not given in amount, it is given percentage, 40% of cost per unit. The cost per unit is 60 rupees. So 60 rupees into 40%, you will get 24 rupees is the carrying cost per unit. Now, if the order quantity is more than or equal to 300 units, a discount of 10% is given. This is the new point. The supplier says if we order the quantity for 300 units or more, the supplier is offering us a discount of 10%. If we make an order below 300 units, no discount. If we make an order for 300 or more, there is a discount of 10% policy. Now we have two policies, without the discount policy and with the discount policy. If the EOQ happens to be less than 300, we apply without discount, and with the discount 300 units. For how much should he place the order in order to minimize the total variable cost? The ultimate objective of the management is to minimize the total inventory cost. Now we compare what is the inventory cost with EOQ policy and what is the inventory cost with discounted policy, right? Now first of all we calculate EOQ. EOQ formula 2CO by I root annual requirement 1000 units, ordering cost 800 rupees per order given in the problem, inventory cost 40% of cost per unit. So 40% of 60 rupees comes to 24. Substitute all the values, 2 into 1000 into 800 divided by 24 under root. You are getting 66,666.67 under root. So after root, you are getting 258.20. So approximately equivalent to 258 units. This is the EOQ. Economic ordering quantity is 258 units. If order quantity is more than or equal to 300 units, a discount of 10% is given. In the problem it is given, the supplier offers 10% discount if we make an order for 300 units or more. The minimum 300 units. So how much discount? 10%. So what is the cost per unit now? 60 rupees without discount. And less 10% discount. 10% of 60 rupees is 6 rupees. So deduct 6 rupees. 54 rupees is the cost per unit after discount. So if we follow EOQ policy, we have to place the order for 258 units. We will not get any discount. The cost per unit 60 rupees. If you place the order for 300 units, we are getting discount and the discounted price is 54 rupees. Now we can calculate the total inventory cost with EOQ policy and discounted policy by considering all the three costs, that is purchase cost, ordering cost and carrying cost. Because there is discount, so we calculate purchase cost also. So in a tabular form, I am going to find out how much is the total inventory cost. Now statement showing the total cost at EOQ policy and discount policy. Purchase cost. First I have taken EOQ policy one column and discounted policy second column. In EOQ, no discount is given, 60 rupees per unit. So 1000 units into 60 rupees, 60,000. Total purchase cost without discount. And with the discounted policy, 54 rupees per unit. Per unit. So 1000 into 54, 54,000. Purchase cost we got. Now ordering cost. Number of orders in a year into cost per order. That is the formula to get ordering cost. Number of orders in a year, annual requirement divided by ordering quantity. Annual requirement divided by ordering quantity into cost per order. So here annual requirement is 1000 and ordering quantity in EOQ policy is 258 units. We have already calculated. So 1000 divided by 258 into ordering cost. The ordering cost per order is 800 rupees where we have calculated. So 1000 by 58 into 800, 3101. Similarly 1000 divided by 300. Ordering quantity is 300 units at discounted policy. So 1000 by 300 into 800, 2667. So we got the purchase cost, we got the ordering cost. Lastly, we have to find out the carrying cost. The formula for carrying cost is average inventory into cost per unit into percentage of carrying cost. So average inventory means ordering quantity divided by 2. I always suggest you to keep a notebook, pencil, calculator, pen while watching this video. Whenever I explain something important, just you write it down. So here average inventory means the ordering quantity divided by 2. Here in EOQ, The ordering quantity is 258 units. So 258 divided by 2 into 60 rupees. Cost per unit 60 rupees without discount. Into percentage of carrying cost 40%. So 258 by 2 you will get average inventory. 60 rupees is the cost per unit and 40% is the carrying cost percentage. So 258 by 2 into 60 into 40%, 3096. That is the carrying cost without discount, EOQ. Now with the discount, what is the ordering quantity? 300. So 300 by 2 into 54. Cost per unit is 54 in discounted policy. Into 40%. You will get 3240. That's all. We got the total of purchase cost, ordering cost and carrying cost. Add up the three. So 60,000 plus 3101 plus 3096, 66,197 is the total inventory cost with EOQ policy. And discounted policy 54,000 plus 2,667 plus 3,240, 59,907. So we got the inventory cost at EOQ policy and discounted policy. Now compare where the inventory cost is less. The inventory cost is less at discounted policy. The final suggestion to the company management. We suggest the company management to avail the discount of 10% by ordering a quantity of 300 units because the inventory cost is lower. That is the conclusion. So it is suggested to avail the discount and place the order for 300 units since the total inventory cost is less, 59,907. That's it. This is the end of problem number 29. Now the last and final problem I am going to explain you, 30th. This 30th problem is on stock levels. One of the technique of inventory management is stock level. The business will keep different levels called reorder level, maximum level, minimum level, and then average stock level. By calculating all these levels, the inventory can be managed properly. The total inventory cost will be kept its minimum. So in this problem, we have to apply the formula for reorder level, minimum stock level, maximum stock level, average stock level, right? So two components A and B are used as follows. Normal usage 50 units per week each. Minimum usage 25 units per week each. Maximum usage 75 units per week each. So minimum usage, normal usage, maximum usage given. Reorder quantity. For A component, reorder quantity 300 units, for B 500 units. Reorder period 4 to 6 weeks. That means for A component, minimum reorder period 4 weeks, maximum reorder period 6 weeks. The normal reorder period 5 weeks, in between 4 and 6. So 4 plus 6, 10 divided by 2, 5. The normal reorder period is 5 weeks for A. For B, minimum 2 weeks, maximum 4 weeks. So what is the normal? 2 plus 4, 8. 2 plus 4, 6 divided by 2 is 3 weeks. The normal usage is not given. Normal reorder time is not given. We have to calculate. Minimum plus maximum divided by 2. Now, calculate for each component reorder level, minimum level, maximum stock level and average stock level. So here 4 types of levels we have to calculate. Reorder level, minimum stock level, maximum stock level and average stock level, right? Now, remember the formula. Component A, reorder level. The formula for reorder level is maximum usage into maximum reorder period. So if you see the problem, the maximum usage is 75 units for any component, A component or B component, both same. 75 units is the maximum usage. Maximum reorder period is 6 weeks for component A. 6 weeks. So 75 into 6, 450 units is the reorder level for A component. Now minimum stock level. The minimum stock level formula is a reorder level minus normal usage into normal reorder period. Write it down the formulas carefully. Now reorder level already we have calculated 450 units minus normal usage. Normal usage is given in the problem 50 units into normal reorder period. The normal reorder period is not given. We have to calculate 4 to 6 weeks. So 4 plus 6 divided by 2, 5 weeks is the normal reorder period. So 50 into 5 is 250. So 450 minus 250, 200 units is the minimum stock level. Now maximum stock level. The formula for maximum stock level, reorder level plus reorder quantity minus minimum usage into minimum reorder period. Reorder level already we have calculated 450. Reorder quantity is given in the problem. For A component, reorder quantity is 300 units minus minimum usage is 25 units into minimum reorder period is 4 weeks. So 450 plus 300, 750 minus 25 into 4 is 100. So 750 minus 100 is 650 units. Maximum level. Last one, average stock level. Average stock level formula is minimum level plus half of reorder quantity. The minimum level is 200. Already we have calculated here 200. Half of reorder quantity is given in the problem 300. So half of 300 is 150. So 200 plus 150 is 350. So we have calculated reorder level, minimum stock level, maximum stock level and average stock level for component A. Similarly, we have to calculate for component B. Same formulas, only figures will be changed. First of all, we have to calculate reorder level. Maximum usage into maximum reorder period. Maximum usage 75 units per week into maximum reorder period is 4 weeks. That is given for component B. So 75 into 4, that is 300 units. Reorder level we got. Now we calculate minimum stock level. Minimum stock level is equal to reorder level minus normal usage into normal reorder period. So reorder level already we got 300. Normal usage 50 units given and normal reorder period 3 weeks. That is not given. That is 2 to 4 weeks are given. So 2 plus 4 divided by 2, you will get 3 weeks. That is the normal reorder period. So 300 minus 150 is 150 units. Minimum stock level. Maximum stock level, reorder level plus reorder quantity minus minimum usage into minimum reorder period. Right? So reorder level already we have calculated 300. Reorder quantity first component B is given in the problem 500 units minus minimum usage 25 into minimum reorder period 2. So 300 plus 500, 800 minus 50, 750 units is the maximum stock level. Lastly, average stock level is equal to minimum level plus half of reorder quantity. Minimum level we got how much? 150 units plus half of reorder quantity. Reorder quantity is given 500. So half of 500 is 250. 150 plus 250, 400 units is the average stock level. That's all. So totally 30 problems I have explained you on working capital, then cash management, receivables management and inventory management. So this is the end of the topic working capital management. Hope my lectures are very much beneficial to you. I have applied my maximum knowledge, maximum methodology of explaining the different topics. So if you are satisfied with my lecture, give a like to the video. Share my channel among your friends, among your family circles, so that more students can watch the video and enhance the knowledge. And I have already started another channel for IGCSE students. The link is given in the description of this video. So please do visit that channel also. Watch the videos, enhance your knowledge and give a like to that video. Share that channel among your circle. Those who are pursuing IGCSE courses, for them that channel will be more helpful. I wish you all the best for your preparations for your exams. Inshallah, we'll start the next topic, next subject in the coming videos.